Okay, Europe, the losses remain substantially the same. What's the problem? What are you going to do to fix it?
Okay, so if we take our performance in Europe over the last 12 months, so we've grown our revenue line by over 30%, and now our revenue is in excess of 170 million euros. And so we're pleased with that level of revenue growth. And importantly, it's given us a critical mass and a massive scale to be able to start to look at some of the key drivers of that business and understand how they really interact with the local market. And so, you know, if we look at what's happened and why losses have stayed flat, in the first half we did see positive momentum in our gross margin, but that then tailed off in the second half of the year. And I'll go through some of the key drivers of that business really and what's happened. So we really see four key drivers. Firstly is customers, and are we delivering to customers with the quality and the experience that we really want to? So are we treating customers as if they were our gran, and would our mum be proud of what we're doing for them? The second one then is revenue. You know, how much revenue can we acquire, and at what cost, and at what rate can we grow? Thirdly then, we look at our product margin. And so fundamentally, how much are we paying for the products and at what price are we selling them to customers? And then lastly, our cost to deliver. So delivering large, bulky appliances is a costly experience. How do we do that in an effective manner? And so if we go back to revenue then, we acquire traffic from lots of different methods, whether that's affiliates, whether that's marketplaces, whether that's through Google, whether that's through organic search, whether it's through new digital types of acquiring traffic. How do we look at all of those? What are the relative costs? And which of those do we think are appropriate to dial up? Where do we want to put more investment because we think it's more sustainable for the future? And which of those have got us to this point of scale that we can now experiment with, but actually as we look to the future, they're not necessarily as sustainable, and we maybe want to dial those back a bit. And so we're working on those. We've appointed a new e-commerce director who's working with us, and we'll look forward to updating more in November as to how we're progressing on those relative ways of attracting traffic.
But in the meantime, it continues to lose money. It continues to burn cash.
Yeah, we continue to invest in that business, but as Mark says, that, you know, going from, again, if you go back operationally and you look at what we've done, we've gone from a business that was a zero startup to over 170 million of sales in a few years with over 1,000 people, or circa 1,000 people in that business. And so that doesn't just happen overnight. That takes time. It takes time to bring them in across every single different discipline. It takes time to grow the scale. And so it is absolutely still our stated ambition that business will be profitable in FY21. And as Mark said, what we are now doing is we are stepping through the key area of the business that we understand, and we know what KPIs that we're looking for. We know what metrics should be achievable, because this is a business that's exactly the same as the business that we've already built in the UK. And then we've got things that we can dial up and things that we can dial down. We don't know yet, and as Mark said, we'll update on what the outcome of the things that we're doing in November at our half-year results. But what we are doing is what I said earlier, which is we're looking at how do we change the pace. How do we lean the group experience into that? We've got lots of experience in the UK, and in truth, you know, maybe one of the things that we've learned on that journey is maybe not to devolve as much responsibility into such a young business as maybe we did. So we're slightly correcting that and leaning more of the experience across. And looking at how we can accelerate that journey to profitability. But as we stand today, it is still our ambition that business will be profitable in FY21.
And you're confident that target will be reached, that it's more than just a stated ambition, it is something you will achieve?
So that's very much our ambition, and things are inherently uncertain. And so, you know, if we look at our KPI on product margin, there are two things there, two sides to that equation. One is the price that we charge customers, and that is within our control. The other one is the price that we buy from our suppliers, and actually, that is very much an art, and we cannot sit here today with absolute certainty and say that we will deliver the numbers that we need to for us to achieve that plan. And so that's why it is clearly an ambition that both John and I have got a lot of conviction that we will achieve, but some of those things are outside our control, so there's no way we can offer a cast iron guarantee. And I think just going back to your earlier point about, but you continue to lose money, and we'll hear from you in November. Clearly, some of the things that we are doing today will have an impact into that P&L before November, and so we are actively involved with discussions with suppliers. We are reviewing our pricing policy, which may have an impact in the short and medium term to revenue, but we are taking actions with the business today to make some of those step change improvements, and we will be able to talk more about how those actions have manifested themselves when we get to November.
You've seen what some analysts say about your European business, that it lacks critical mass. It's just not big enough to be as disruptive as you would like it to be. If that's the case, then you either grow or you get rid of it.
So is it big enough to be as disruptive as we need it to be? It is certainly being extremely disruptive in the market. And so, we've got net promoter scores of over 90, customers are voting for it, the business is growing, and yes, it is gaining its critical mass. And as I said, we did this from a startup, not through an acquisition. We did look at doing acquisitions, and there wasn't a business that was available to us that we would have been happy with. So that just does take a little bit longer from that perspective. And we were clear at the outset that we believed that the profitable position of that business is going to be somewhere 250 to maybe 300 million a sale. So we're on that journey. And as Mark said, we've done this whole journey in the UK. And so we know the metrics that we're looking for, and we continue to lean the experiences of still being a growth business in the UK into that German business. So is it subscale? Yes, but it's on a journey to scale. Is it loss making? Yes, but our ambition is firmly to support that business to a journey of profitability in FY21.